Friday's trading session started out with a big gap down near the 6650 level. Buyers immediately stepped in with the S&P rallying the rest of the morning. S&P closed down 0.05%, nearly flat at 6734.11. We continue to see strong support out of our lower dealer cluster zone. This is an area where option dealers flip to net buyers as market participants close out the majority of their put positions, and we've seen this happen multiple times over the last month or so, providing a really nice area of support between the 6650 and the 6750 zone. Our dealer cluster zone on the upside remains around the 7,000 strike, and this is still our year-end target despite the overall volatility that we've seen over the last several weeks. This volatility has essentially formed a large consolidation range, and as long as these lows hold down here around the 6650 level, we think the probabilities for another leg higher towards 7,000 into year-end is still very high. Zooming out now to our daily candlestick chart, you can actually see the pattern even better. This was the second time over the past week that we've dipped down into this 50-day moving average, the 50-day moving average being the red line on our chart. That happened the past two Fridays trading sessions, and so interesting to see buyers stepping in each of these times. Last week that resulted in a move higher towards that 6,900 level before failing back into the 50-day EMA. That again was bought during Friday's trading session. So next week is the big options expiration for the month of November, and typically these weeks have historically had a positive skew over the course of the week. We'll see if that holds through this week or not, but you can just see looking at the chart, this is a large support zone. Basically, gamma exposure really drops off below the 6650 level. Most of the concentrations are skewed to the upside towards that 7,000 strike. Next, let's move over to the Qs and take a look at the gamma exposure setup. A very similar picture as to what we were seeing with the S&P 500, with the Qs also coming into its 50-day EMA as well as its lower dealer cluster zone. Not a huge surprise there, but the gamma exposure structure is very different on the Qs. You can see this large gamma exposure concentration at the 600 strike has actually been sitting there for the last several weeks. We've pointed this out multiple times in our live stream that any dip down towards that 600 strike was likely to be met with buyers. As you can see, there's very little gamma exposure below that 600 strike. So this oftentimes becomes a big inflection point in the market where you see these large gamma exposure concentrations. And that's an area where option dealer activity picks up tremendously, basically as a mirrored result of market participants trading activity at those levels. And so market participants closing out their puts or puts expiring worthless, either way, that gives some upside lift to the market overall as option dealers are forced to buy back shares in order to keep their books balanced. And by the way, you can track our trades in real time as we manage our options portfolio and analyze the GEX data in real time by becoming a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by checking out our community Discord, absolutely free. I'll put links in the description below to both of those so you guys can check it out. Next, let's take a look at the volatility index. Volatility was actually down overall on Friday, by the end of the day down 0.85%, closing below 20 at 1983. We've seen heightened volatility, of course, over the last several weeks with multiple closes above the 20 level. That's kind of our line in the sand for a move from a low volatility regime to a moderate volatility regime. And so since we have had several closes above that 20 level, we want to monitor whether in fact volatility is moving into a more moderate regime. And that would represent volatility between the 20 and 30, maybe up to the 35 level. But undoubtedly, volatility basically since the lows in September has seen a series of higher lows and higher highs. And so we've seen an inflection point during the month of September, which has basically persisted until now. We don't think a major volatility spike is imminent, primarily for the fact that most of the GEX concentration is between the 17 level and the 25 level. And so while there could be some smaller spikes, as we've seen the last couple of trading sessions up into the low 20s, maybe even up to 25, currently the GEX picture is not showing any kind of big positioning at higher strikes. In fact, most of the volume in the options market on Friday was at lower strikes at the 20 level and below. So far, volatility selling strategies have been able to keep a lid on volatility in general. We'll see if that holds true over the next several weeks. But in terms of the options market, particularly on the VIX, it does appear that most of the concentration in the options market in terms of both volume and gamma exposure is at the 20 strike and lower. Next, let's take a look at a couple of names that we are actively trading. Let's start off with Nvidia. Nvidia actually doing pretty well during Friday's trading session, up 1.77%, closing at 190.17. Nvidia, like the overall market, coming into its 50-day EMA and seeing buyers step in immediately, and that's what bulls would want to see as we approach these important technical levels. And we've seen this multiple times, of course, over the last several months. Every dip into that 50-day EMA ultimately has been bought. Gamma exposure continues to be concentrated at the 200 strike, and we've seen that as a large pivot zone. We got above 200 during the month of October, and we did see some selling pressure, of course, off of those levels. But the fact that we continue to see gamma exposure pointing towards higher strikes all the way up to the 220 level and above, I do think that overall the trend remains to the upside. As long as we hold these levels and buyers keep stepping in at major technical support, we think that Nvidia actually has a good shot of rallying back to 200 and even above by year end. And we actually added a position in Nvidia to both of our portfolios last week by selling the November 28th Nvidia Iron Condors. This is basically aimed at collecting premium while price stays between the 180 and the 210 strikes. You can see that's the center point of our Iron Condor there, the 175, 180, 210, 215 Iron Condors. We sold those for $2.16. And Nvidia basically doing what we need it to do, just hovering right in that zone. At the time we put the trade on, Nvidia was trading at 192.02. Fast forward to Friday's trading session close, Nvidia was at 190.17. So exactly where we need it to be, basically between the 180 and the 210 strikes over the next couple of weeks. As long as we continue to trade in this range, and you can see this is actually the range that Nvidia has been trading in over the last couple of months. As long as it can stay in this range, those Iron Condors are going to decay, allowing us to collect some decent profit. Next, let's take a look at Apple. We actually don't have a position currently in Apple, but we've been watching this consolidation over the last couple of weeks, basically between the 270 and 275 zone. You can see gamma exposure is concentrated mostly between those levels, most of the options volume also between those strikes as well. However, we have seen gamma exposure at the 300 strike growing pretty significantly over the last several weeks. The overall trend also is pointing up into that direction for a potential move into 300 over the next couple of months. Coming over to our 3D surface model, where we can take a look at gamma exposure by expiration date, you can clearly see that the November 21st expiration coming up this Friday sees the 275 and the 280 strikes as the largest probability targets, and so that is slightly higher above where we're trading right now. And in fact, if we go out to the December expiration and take a look here, obviously gamma exposure a little bit smaller at these strikes. However, the 275 and 280 still very large gamma exposure concentrations, positively skewed, as you can see, and that 300 strike is hanging up right there with it. So the possibility for a move up into 300 by December 19th is growing. So that is something that we're watching very closely, and we're going to continue to monitor that for a potential position, and we'll be discussing option strategies to take advantage of this potential move in the coming weeks. And guys, we are running a limited time promotion where you can get an additional $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We're going to be ending this promotion soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.